I'm Caroline Woods, and today we're going to talk about the value of financial education to empower women investors. Joining me for this conversation is Mona Mahajan, Senior Investment Strategist at Edward Jones, and Marie Taylor, a financial advisor with Edward Jones. Mona and Marie, it's so great to have you here with me. Before we get started, I just want to remind our audience that we, of course, want to hear from you. So please be sure to type your questions in the chat. We'll get to as many as we possibly can. And also, be sure to answer our poll question. We want to know what your biggest priority is right now when it comes to your financial plan. So, all right, let's get to it. Mona, let's kick things off with you. And this has been touched upon already, but I really am interested in your insights just in terms of challenges that women face when it comes to investing, specifically those that are unique to women versus men. What are you seeing at Edward Jones?
Yeah, absolutely. And first of all, Carolyn, it is fantastic to be here. This is a topic that is not only meaningful to me personally, to us as a firm, but really we're seeing a transition in the industry. I think you talked about, or we've addressed, how the McKinsey study has shown women right now control about $10 trillion of US household financial assets. That is set to grow to 30 trillion by 2030, according to McKinsey. So a very short period of time, a very large amount of transfer of wealth. So this is a cohort, of course, that cannot be ignored. Now, to your point, do women face unique challenges? Absolutely, yes. And I can highlight three that we found in our research. First and foremost, there is still the gender pay gap. Now, it's getting better. And in fact, as women get more education, it gets even better. But on average, the Census Bureau says about 82 cents to the dollar. For every dollar a man earns, a woman earns about 82 cents on average. Now, number two, of course, women do tend to live longer. This is not necessarily a bad thing, but on average, 6 years longer, which could be very nice if you're enjoying your retired life. But we do have to plan for that. We do have expenses later in life that we have to account for. And then, of course, number three, we all know women tend to be caregivers. So whether it's caring for children, whether it's caring for elderly, over time, this can mean that they have to step out of the workforce for a number of years. And that can mean less savings, less investments, less potential retirement assets. So these are the challenges that are unique to women. Now, the good thing is these are not, in our view, insurmountable challenges. We do think with the combination of education, financial planning, and some consistency, all women can really overcome these, especially as we head towards that great financial future we talked about.
Okay, Marie, let's bring you into the conversation and really home in on that education component, since this session is really about how education can help women investors build wealth. Talk to me about the role of education in solving some of those hurdles that Mona mentioned.
Yeah, and thanks again, Caroline, for having us on the panel. Now, education is so important, especially now. And as Mona mentioned, as many of the women who are actually going to be having all of that wealth, we want to make sure that we're educated enough to handle it. And a couple of things that comes to mind is empowerment. You know, once you're empowered and understand your own finances, taking care of your own personal finances, that's a big deal. Okay, so education is ideal. One of the studies that Edward Jones did with Money Consult, 20%, only 20% of respondents say that they actually learned financial strategies in school. 20%. 28% say they lack confidence. And then when you look at it, 60% said if they understood debt management better, they would be more confident. So when you look at education, being independent, you know, that independence is so key, because a lot of times people stay into certain situations because they don't have the independence or the confidence to move forward. But education is a key factor. Another program that Edward Jones have created in 2020 was the Financial Fitness Program. And that, again, ties into some of what Mona just mentioned, because what we're finding is the lack of education is what is actually holding us back. And with the study that Edward Jones did, they wanted to reach a million learners by 2025, and right now we're above 800,000. So we're seeing that right now, where education is key when it comes to financials. Yeah.
Mona, Marie mentioned this financial fitness. So if there has to be a routine for this fitness, what would you say some of those check boxes should include to be financially fit?
Yeah, absolutely. And, first and foremost, wanted to highlight that our studies and our research has found that women actually tend, on average, to be slightly better investors than men over time. And in fact, it's interesting, it confirms some of my own biases, but there are a few reasons that are highlighted for this. One, they tend to be a little bit more consistent. So they don't follow the latest and hottest trend that they see on the marketplace. Number two, they tend to be less impulsive, meaning that they're not trading as much. They're not as transactional in and out of the markets, which means less transaction fees, which also means less tax implications overall. Now, we do think confidence, as Marie mentioned, is key. But some of the more practical things that investors and women investors in particular can think about as they're building their portfolio and wealth over time. One, do you have an emergency savings fund? Two, are you contributing to your own employer 401k plan consistently over time? And three, as you get closer to retirement, you have to make decisions around Social Security. Are you able to take Social Security at 62, or can you hold off a few years and get the maximum benefit? And so these are decisions that women can make with the help of a financial advisor if they so choose. But it's important. The key, we think, is to start thinking about them as soon as you can. You want to make sure that you're maximizing your time in the marketplace, you're maximizing your investments. We always say, you may be going to work every day. You want your money to go to work for you as well. And over time, that power of compounding really does help support not only meeting your financial goals, but potentially exceeding them over time as well.
All right, well, we're starting to get some questions in, so I want to make sure we get to some of these. Marie, I see here, how can we teach young people to save and invest for the future, especially those from families that don't teach these things and those from minority groups that may not have the benefit of generational wealth?
And that's a very good question. Now, one of the things, there are so many different programs out there that teaches financial strategies right now. We're not saying to go to college and get a master's and a PhD in finance, but we're saying, a couple of things that can be done with the financial fitness program that we're bringing into the high schools. Okay, and also into the communities. That's a digital program that is out there that can be incorporated into the school districts, which is some of the things that Mona and I, we're going to Washington, D.C. right after this. We're going to be bringing this up to our congressional staff, that financial fitness is key for young learners. Okay, so that's one of the things that we'll be talking about. But if you have not had this in your generation, this is ideal that you start now. Start from the high school students. We even have it earlier, for the K through 12 as well. So it's very important that you find some way of learning. One other way that you can learn is find out, network with someone who is very good at their finances, or get a mentor. I know when I started, I had a mentor. And this woman, she had everything perfectly well. I wanted to be like her. So I took her to lunch once a month. Okay. I also paid for the lunch because I wanted to learn, how did she get her wealth and how did she maintain it, and some of the things that I could learn from her. So find someone who is very, very good at their own finances and pick their brain, but pay for the lunch yourself.
And hope that you get a good return on investment there. Mona, here's a question. What would you suggest for women hesitant to move accumulated savings to investing? Fear is a prevalent factor in our community. It takes so long to build those savings accounts, and I can understand why people would be nervous to invest knowing that there's risk involved.
Yeah, absolutely. Look, first of all, congratulations for building those savings. That is the first step. Like we talked about, we want to make sure we have enough savings to cover at least 6 months of any emergency funds we may need, and just general living. But we do want to transition to more traditional stocks and bonds and investing portfolios over time. And this is because when you look at any 30-year period, the most lagging asset class tends to be cash and cash equivalents, even in today's environment where you're getting 4 to 5% yields. If you look at something as simple as the S&P 500, it is up over 20% over the last 12-month period. Bond markets are also doing quite well and could do even better as we think about a Fed that may be starting to cut interest rates going forward. So it doesn't have to be complicated. When you think about moving from savings to investing, it could be as simple as buying a set of ETFs that you like. Maybe it's a broader S&P 500 ETF. Maybe it's that combined with, maybe you're a big fan of healthcare or technology or financials and banks. Think about the sectors that you like to invest in, but also think about being diversified and long-term. The key to it is once you set up your investment portfolio, try not to get emotionally attached to it. You will go through periods of volatility. We know bear markets and bull markets are common over any 30-year investing period. But I'll leave you with this stat. Any given bear market is about 13 months in length, and your portfolio can move down about 20 to 30%. Bull markets, however, are about 3.5 years in length and could move up on average 167%. So you really want to be invested for those bull market periods that could occur several times over your lifetime of investing. So nothing to be scared of. In fact, you're in a great shape if you've already started saving. Think about slowly transitioning to investing.
So I was just taking a look at our poll results, and so far it seems like the majority of people right now, their biggest priority for their financial plan is actually paying down debt, about 37%, followed by saving for retirement. So with that in mind, Marie, talk to us about the importance or the benefit of maybe talking to a financial advisor as you are one yourself, just because someone may be on here listening to Mona talk about investing in the S&P returning 20% versus cash, and it might seem overwhelming just hearing kind of a broad level of that. So how can a financial advisor help with that? And what should people actually be thinking about when they're going ahead and actually considering talking to one?
Well, first of all, guidance. One of the things that we're helping you with is guidance. Okay, I know there's a lot of people who do like whether it's the robo-advisor or anything like that. But one of the things that we help with is guiding you, making sure we understand what's important to you. So we create a process for you, not what's important to us, but it's what's important to you. What are the things that's keeping you up at night? And that's how we help to guide you, making sure that you have the proper goals that are set. Okay, those are very important, that you have someone that can help you lead the way. I know if you're just driving a car, you need someone in that seat to help you, steer and tell you exactly what to do. And some of those things that we are able to help as a financial advisor, making sure that you're not making mistakes, costly mistakes, for instance, selling earlier than you're supposed to, or withdrawing funds from your 401ks. That can be, very costly. So there's a lot of things that a financial advisor can help you. Someone that knows you, not just as a number, but know exactly what it is, knows your family, and can build that relationship with you to guide you along the way. So we have a process that it's a 5-step process. We want to know where you are today, where you want to be, how can you get there, and then we come up with a strategy and make sure that we can actually help you get to that space or that endeavor or that retirement that you're actually looking for. Yeah.
Or discussing that debt that you want to pay down. Mona, here's a question. Can we touch on how women are often in the sandwich generation, where they are taking care of children and aging parents at the same time, and that can lead to exiting the workforce or lower earning potential?
Yeah, it's a great call out. One of the challenges that are unique to women that we highlighted up front. And in fact, the research shows over time that can lead to 15% less earnings potential over a lifetime, because you do have to step out of the workforce and you do lose that bit of savings and investment. But all that being said, ever more important than for women to start thinking about, one, starting as soon as possible. So we do think what we're seeing with millennial women, for example, they're not only spending less and thinking about savings more, but they're also doing things like starting a side hustle or perhaps even relocating to a more cost-effective area. So starting to really think about what they can do to manage their expenses and savings and investments now to create a better future for themselves during those retirement years. And so what we'd say is, the steps are the same. You need to get educated. You need to build a financial plan. And, Marie didn't talk about how often I'm sure she plays the role of psychologist as well as emotional support provider to our clients. And, typically we see a lot of our clients, and sometimes even, myself, calling in, am I still on track? What's happening after this, period of market volatility? That is the role your financial advisor can play for you. If you do feel overwhelmed or not as confident in building that portfolio or starting that plan, that is a great place to start. Now, what we'd say is, once you start, be consistent over time. Try to reinvest some of the gains that you make rather than starting to pull out returns too early. That's another mistake we see often. And what we'll say more broadly is during retirement years, what we've found in our research is that women tend to also, while they do have challenges to overcome, they are also the recipients of some really nice windfalls. And these windfalls include things like having a grandchild, taking that dream vacation, even finding a new passion later in life. So really what our goal is to set women up now so that when they reach those stages of life, they feel comfortable, they feel confident, and they're there to really enjoy the benefits of the hard work they've put in.
Marie, what about those people who maybe have a 401k that they've been contributing to because their company matches, but they're not very involved? They kind of rely on whoever is controlling that 401k to make the investment decisions. What can they do to maybe level up in terms of education?
And for individuals, those individuals, it's so important that you get educated again. Line up with another financial advisor who can help you and see on that statement, are you on track or know more about what your goals are? So you're putting the funds in, and 20 years down the road, you still don't understand what you're doing. That's why you go to a financial advisor who can help and guide you, because maybe your risk tolerance may not be the same as you were 20 years ago. Someone needs to explain those things to you. Okay, so there are so many facets to that you can actually help with bridging that gap and making sure that you are on track with that 401k, but making sure that you are still taking advantage of it, because there are those who still do not take advantage of the 401k that the company offers. So you need that help to say, okay, when they come into the branch, okay, did you participate and are you maxing out your 401ks? Yeah, I know that we're at time.
Mona, as senior investment strategist, we only have a few minutes left, but I am curious just, about if we could talk about investment strategy. What are some key market opportunities that you're seeing right now, given what may feel like to some a very challenging economy?
Yeah, it's a great question. And in fact, we can summarize it in that we're seeing opportunities in both stocks and bonds. And some of the reasons for that: one, we are seeing a Federal Reserve that will potentially cut interest rates later this year. So when you think about all those CDs and money market funds you might have been stocking up on over the last 12 months or so, think about slowly complementing those. You don't have to wholesale give them up, but start complementing those with more traditional equities and bonds that do better in a lower rate environment. And when we think about what's been working over the last 12 months, which is really that mega cap technology trade, what we see over the next maybe 12 to 18 months is a bit of broadening in market leadership. So it's not only large cap tech, but it is also part of your cyclical markets, your small and mid cap markets, your international markets, all playing some catch up over time. So that's really a great opportunity, we think, that'll occur really over the next 12 to 18 months. And similarly with your bond space, you're locking in some of those better yields now, and you get price appreciation, by the way, when the Fed starts pivoting lower. So I'm always available if you have questions around the advice space and the strategy space, but hoping that women get excited for the opportunities that lay ahead of them.
Most definitely. And Marie, I want to give you a chance to kind of get a final word in here. If there's one key takeaway when it comes to empowering women, educating women so that they can build wealth and not have to work until they're 100, they can retire at a decent age, what are your final thoughts that you can leave us with?
Okay, first of all, educate yourself. That is so important. Have that emergency fund. It may be 3, 6 months, but it may be 12 months, depending on the career that you have. And really work on that budget. You need that budget worksheet. But what I usually say to my clients is, okay, take 7 days on a notepad and list every single thing that you buy on that for that 1 week, because those may be things that don't go on your budget worksheet. Okay, and you need to know what they are.
All right. My page might be a little too long. Marie, Mona, thank you so much for your insights. Really interesting. And thank all of you for joining us. This flew by.